Good morning, everybody. Happy Monday. Did you miss us? We missed you. Welcome to Pre-Market Prep. I'm Spencer Israel. We got Joel Elconin here, Dennis Dick here. It's Merger Monday. Why do all the merger announcements always happen on a Monday morning? That can't be a coincidence. We have Spirit Airlines and Frontier. And if you missed it over the weekend, actually Friday evening-ish, the Journal reported that maybe Amazon sniffing around Peloton? We'll talk about that. We'll take questions from the chat. We'll preview the week in earnings land. A lot to get to. Tim Quast is our guest today from Market Structure Edge. So go ahead, hit that like button, and let's get started. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. Hey, Joel, good morning, sir. How was your weekend?
Oh, excellent weekend here in the Motor City. Did a lot of fun things, but ready to get back to the markets.
Well, go ahead and share your chart so we can get to
Yeah.
what they have.
All right, a not super cold day here in the Windy City, but Windy City. What am I saying? Motor City. But we're ready to get started. The futures have had a nice range. Bottom line is we're up 7 points at 44.90, 99.50. Crude's in the red. That's in the red by $1.03 at 91.28. Gold back over 1,800 again, up 690 at 1814.70. Silver in the green by 45 cents at 22.92 and a half. Bitcoin continued on that strong move from Friday. That's up 2K at 42.60. And Ethereum's moving about the same way on a percentage basis. It's up $116 at 3076.50.
All right, so and before we get to like the merger stuff of the day, we should probably just like talk about last week for a second. In the grand scheme of things, was a good week, Joel, right? In the grand scheme of things.
Yeah, it was. Yeah, I did the weekly numbers.
Yeah.
I looked at everything. Friday, they had on the ropes a little bit. It looked like we were going to get back to week's gains, and once again, the market came back, and so here we are, 4,500. We've taken back a good part of the move. I think this is a big week for the market. If it can, or even today, we hold in here today, 1 or 2 more days. Keep the buy the dippers out of here, make them pay up. It looks good. The high from last week. Whew, man, we barely touched that. We came down hard off the Facebook. So market has to prove itself today and this week. So we're bunching up right here at this 4,500 level. We'll probably trade through it about 87,000 times before we pick a direction. But you're right. It was a good week.
All right.
Tough market. You can feel the FOMO back though. Like you can totally feel how there's FOMO in here, and that makes me think short term we could pop up here again. I think we could retest the highs from last week, which is up at 458 SPY. I think we're still in trading range though, and I still want to keep cash just in case this bull market is not as strong as everybody thinks it is. So I'm being cautious. I'm still trading somewhat cautious. Always trade somewhat aggressively though, but investing cautiously still because just a lot of unknowns.
Let's go to the news here. It's Merger Monday. It's always merger. I feel like every Monday is a Merger Monday. Surprised to see this one a little bit. Everyone's two favorite discount airlines merging this morning, Frontier and Spirit. I swear, each time I fly either of them, I swear it's the last time, and it never is. But
you get that big front seat on Spirit. It's awesome.
Yeah, right.
The big front seat.
Here's the situation. It is a merger with a cash component to this. So Spirit shareholders are going to receive 1.9126. So
oh my goodness, it's too many numbers. 1 point, writing it down.
1.9126.
All right, we're calling that 2.
That's how many shares of Frontier you will get if you are a Spirit shareholder, plus a $2.13 dividend, I guess.
Okay.
So there is a cash component to that, but SAVE and ULCC are your tickers in play here this morning. And we got ourselves a good old-fashioned merger.
So you risk arbs, you got another one out there. I always like it when I get new deals, new toys to play with. That's what that is. It's new toys to play with as the risk arbs. And obviously I write down the ratios, you add them to your sheet. You know that those two stocks will trade in that relationship there for the foreseeable future. I don't think there's antitrust issues in the airlines because the airlines are struggling enough that I don't think any regulator is going to come in here and say, no, we can't do this, even though it's 2 discount airliners. There's enough airliners out there. I don't see any issues there. But you never know. I didn't think anyone was going to be with Activision Blizzard either, and that stock has been significantly below the takeout price. So sometimes it's nice to let the dust settle for a couple of days, see what the risk arbs are pricing it all in at. Obviously, we've got to look at the time value of money as well. So you got to think about which something we haven't had to think about for a while, but as interest rates start to go up, there is a time value component to it. So because that money could be used elsewhere. So think about that too. But the ratio 1.9126.
There you go.
Do you think any
I think
other?
it's a good deal. I don't know the prices. I mean, it's obviously a little bit better for Save than Frontier, but I think in this environment, consolidate, between the two companies. I think it's a good thing long run. I don't know how the two are going to fare together, but you're streamlining some costs. Should be a good thing in the long run.
Do you think other airlines
I was thinking
merge
about,
to
yeah.
try to get costs down? I mean, this is a major issue for the airlines, obviously, is costs. And there's lots of synergies when you start merging them together. I mean, we've got, a half dozen majors out there and just a whole pile of regionals.
Yeah.
So
So
is this the start of airline merger mania, or is this
I
just a
think
one-off?
So maybe
I think so.
maybe you look at like a SkyWest SKYW, right?
Yeah,
Or a Hawaiian still around, right?
yeah,
HA,
yeah.
Allegiant, ALGT. These are the smaller
This is why we
ones.
pay Spencer the big bucks.
All right, that's it. I knew there was a reason.
I'm
You
writing
could,
all these down.
JetBlue's a little smaller, right?
Yeah,
JBLU,
yeah.
it is, and then these are all obviously U.S. based airlines, but you got a couple overseas airlines. You got a bunch in Latin America, right? You got
Yeah.
CPA is a Latin American, couple Mexico. Yeah, I don't know, maybe like AZUL. It's Brazil. VLRS.
You get this out of your head, or you go right to the pro and you find this.
No, I
pro?
went right
He
to
goes
the
in the
pro.
pro.
I'm
You
getting
can
to
tell
the
when he's
pro,
looking
man.
at the pro.
Yeah, I'm reading off this.
He's
This is
looking
not
at
off
the
the
Well,
top.
show
Oh,
us how
yeah.
to do that. Let's pitch the pro again here, because such a
Again.
great tool, and obviously, we do the show for free. It's one of the only things we sell is the Benzinga Pro. But I mean, just show us anyways, how to do this in the pro, because
Check this out. I'll do it from scratch for you. So this is the Benzinga Pro home screen. You can look up any stock that trades in the U.S. by going to the details widget.
yeah,
I just went and I looked at Save.
yeah,
SAVE, that's Spirit. This is the Spirit Airlines homepage. Whole bunch of stuff there. I'm only interested though in this little tab here. It says peers.
ooh, nice.
Oh, who are their friends? Oh, look at that. I'm just going to sort by market cap for fun.
Nice.
There we go. All right. And I was reading all off this list
Small
right
ones.
here. All of that's where I got Allegiant, right? It's where I got
Yeah.
SkyWest, where I got Hawaiian, right?
Yeah.
Copa, CPA. There you go. This is how we got there. So if you're ever looking for sympathy plays, it's basically 2 clicks away in Benzinga Pro. That's how I was getting that information. So maybe you see some activity there. I don't know.
I think this fits in very well with my thesis about, smaller airplanes, smaller crews, easier to manage. I mean, they're both discount airlines. I know they have some bigger planes and stuff, but looking more for much more regional travel. Or, whether this would have been a trend coming before the pandemic or not, but this is pretty much, fits with my thesis for the airline industry moving forward. Smaller flights, smaller crews, smaller expenses.
I think so. I think in order to survive, there's going to have to be some more consolidation as well. So I like this merger for both these companies. I think there's going to be more. I think that list that Spencer just gave you, I think there's going to, when we look at it 2 years from now, I think there's going to be less companies on that list, less airlines. So I think there will be more mergers. Am I jumping in and buying all these things saying mergers are imminent? I mean, they're struggling businesses, and I always say, you don't want to just jump into a trade because it might get taken over. And this is going to be a nice segue into the next stock that we want to talk about, because it is Merger Monday, and there's huge rumors around a widely followed stock that Mr. Spencer Israel props to him for calling this last week that he thought this was a potential takeout candidate. And I battled with him saying it wasn't. And so far, I'm being proven wrong because there's rumors coming from DJ about Peloton being in play.
Yeah, let's hold the phone. It was the Friday evening news dump from the Wall Street Journal that
good source though.
Great source. But if you weren't watching, then you may have missed it. They reported that Amazon is talking to some bankers, maybe is potentially sniffing around Peloton. Was the headline from Friday at like 5:30 p.m. Eastern time. And they also teased a couple other potential suitors for Peloton, though they declined to get specific. They cited the fact that there was that investor, that hedge fund in January that called for someone to try to buy Peloton. I always thought Apple would make sense or Nike would make sense. I didn't think Amazon per se, but it is but a rumor. But rumors.
They sometimes materialize, and when they come from Dow Jones, there could be something to it. I don't doubt that maybe there's some interest. I doubt very much that they're going to be buying it. Like I don't think it gets done though. I think when they analyze it, they look from a valuation perspective. Thought process, and this is my argument last week. Thought process is, can it make sense, Peloton, for some of these companies? Maybe, but the valuation is just pretty crazy still. I mean, you're talking about a $10-12 billion valuation on a company that's struggling a lot. I mean, sometimes they get thrown a lifeline, these companies, and that's what a lot of, shareholders in this thing want, is the lifeline, because a lot of them are underwater. But at the end of the day here, it's still a business that's very much struggling right now. And you look at the potential suitors, Amazon, they're not a big that comes in and buys up companies. Apple never seems to, go and pay $10-12 billion for another company. It's rare. Nike could be a fit, but again, it's a valuation that I just keep looking at and thinking, why am I buying a struggling company for 12 or 13 or 14 billion dollars? Because the market cap's still too high. Does it make sense at $5 or $6 billion? I think so. But they were a long ways away from those prices. I would be in the teens. So I can't, get behind buying it here at $33, struggling business, because if the rumor doesn't materialize in anything, it's going to continue to leak. Maybe it gets taken out, but is the premium even that much better than what it's trading at right now if it gets taken out? Because you're talking about a 33% premium here this morning on speculation that somebody thinks is going to get taken out of $40 or $50 or $60. I don't think that's the case. I think if it does get taken out, I think a lot of the premium might already be baked in. So not a fan. I have no position. And people have been asking me, because I tweeted about this weekend, I have no position in Peloton, no skin in the game, just an opinion. And my opinion is, if I owned it, I'd sell it at $33.
All right, I know Joel has thoughts here.
Yeah, we're gonna use today as a little bit of a teaching lesson.
Oh, I'm afraid. I'm
scared right now, actually.
Okay.
He looks upset.
Dennis, first of all, to answer your question, why would these companies buy it at that price, X price? Because they think the potential value is 2, 3, 4, or 5 times X. That's why these companies.
How do you get those numbers?
No, I'm not saying how. I'm not buying it. Okay, I'm not the company. I'm telling you, that's why companies do mergers. And I'm not saying it's worth it. I'm not saying they're going to do it, but that's why companies do mergers and acquisitions. But they think because spending the money, putting the money towards that new asset, will have increased value over time. That's number one. That's why companies take over companies.
Well, that's good to know.
Number two, let me finish. Number two, I'm not going to talk technically about this stock anymore. Okay, because I own the stock, and whatever is going to happen is going to happen, whatever level I give or whatever I think. So I'm not talking technicals about it.
Okay.
Number three, what is the most important thing to you in yourself? And really overall, what's the most important thing for you? Your health. Okay?
Sure.
Why did I buy this Why did I buy this stock? Why did I buy a Peloton before the pandemic started? Why did Lisa and I buy it? Why did we buy it?
Because you weren't going to the swimming pool and going swimming.
No, we bought it before the pandemic. We bought it before. So we still have our pools. We still have our gyms. We bought it before the pandemic. We bought it because it's good for our health. Okay.
Right.
because we think it's important. You can't always get to the pool. You can't always do a thing. And it really is for Lisa, works early mornings and stuff. She wanted it because it was a good way for her to get a good 20-minute, half-hour workout in and without having to go to the gym. Okay?
Okay.
Dennis and Spencer, how many times have you guys worked out in the last 2 weeks?
I went for a run 2 days ago.
Once.
Okay.
Once.
Okay.
But
And if you have
yeah.
something at a convenience,
Yeah.
okay, at your home,
Yeah.
okay, it may not be the greatest thing, but Dennis, just think how many times that if you had a Peloton, the times that you're home and during the pandemic, besides doing a run, which is hard on your knees, you could have got on a Peloton and done a 15. You could do arm. You could do a bunch of different things. Okay.
I agree.
So
Wholeheartedly,
yeah.
I agree.
So
And I agree. I agree that Peloton's a great company and they got a great product. I don't agree with the valuation. I've never agreed with the valuation, which is why I've been bearish the stock since $120. I was wrong all the way out. I had it. Joel, I own the stock. You know I own the stock. I sold it at $42 way early because I thought, okay, it's starting to get richly valued. Went to 100. I'm a value guy. Went to $171 because everybody got excited with the lockdown and we're all going to be riding Pelotons and we're never going to go back to the gym again. That's not the case anymore. Gyms are opening. We are reopening. Everything is reopening.
So you're looking at this as a direct correlation, okay? And
well,
you're not
looking
at all the people.
No,
Dennis. I own a Peloton and I go to the gym. They're not mutually exclusive, okay? You don't have to either have a gym membership or have a Peloton. They're not mutually exclusive, all right?
You can have both.
And I just want to congratulate Amazon and Nike and Apple, whoever the potential suitors are for this company, that they recognize the importance of health. Okay. Is Peloton the best way for people to work out at home? Maybe it is. Maybe it isn't. Okay. But what is important is it got people thinking in that way. And a lot of it was because of the pandemic. So I think it's great that people are more aware of their health. I think if we're going to learn a lot of things from the pandemic, one of those things is taking care of yourself, and your health is very important. Okay. Whether this will lead to selling if Apple's behind it or Amazon's behind it or these other companies are going to be able to promote it better or help with the expenses, that's a possibility. But I think fundamentally it's a great company because it's trying to people improve on their health. I can't argue about the valuation. I can't argue about the price action. But I just how many people in the chat how often do people in the chat work out? How easy is it to go to the gym? There's different things. So will prices come down? Would they have a different way to market it? Or they have a way to make it cheaper? There's a lot of things that these companies can do. So I'm glad to see the news, not selling the stock. You guys could do, I wouldn't be short it, and I'm already long it. So that's
Joel's a believer. And maybe valuation doesn't matter. Maybe we go back into this market where it doesn't matter. In my market, in my investing portfolio, valuation is the only thing that matters. So, and the valuation makes absolutely no sense up here. So that's why I'm selling it. So I agree with every single point. Stop. You talked for 5 minutes. I'm going to talk now too for a minute. I'm not going to be long.
Well, you interrupted a few times.
With every single point you made, Joel. I agree with every single point you made. Perfectly made points. But you said it's the valuation. Like you said, I don't know if I agree with the valuation. I can tell you I completely disagree with the valuation. So I think Peloton, as they've built themselves a great brand, great name, great product for a lot of people. A lot of people really enjoy it. It's not a coat hanger for everyone. It's a good product for everyone. I can't wrap my head around 12 or 14 or $15 billion valuation for Peloton when Planet Fitness sits there with a $7 billion valuation. And you can go to Nautilus and it's in the millions. So, I mean, obviously, way better brand. But when you start comparing, just going at and looking at NLS, for instance, and I can't bring up for some reason, I can't bring up I'm trying to.
Is it still around?
Yeah, it's still around.
Look, so sometimes companies grow into their valuations. Right?
I'm saying the growth isn't. So Nautilus, so they've been doing home equipment for a long, long time. They do a great job with it. They have some good equipment. I have their weight set. It's awesome. Click weights, really good. Their valuation is $145 million. So Peloton, home equipment, valuation today, $11 billion. So you're saying it's 100 times better the Nautilus. I can't wrap my head around that, and that's why I'm out. That's why I don't want to own it at $33, and that's why I'm not long the stock. I have no position, but it's all valuation for me. Not interested up here. And I don't think Amazon's going to be interested up here, and I don't think Apple's going to be interested up here. I think Nike kind of makes sense, but I think they're going to look at it and say, valuation's tough, man. Tough valuation. I don't think it's going off the board of 40. I don't think it's going off the board of 50. If it goes off the board, like on these rumors, I think it's going to be like 35. So then you're looking at, well, you just, pretty much got it there. And if it doesn't, if this doesn't get taken over, if Peloton does not get a deal, I think it's a single-digit stock eventually. So they need to get this deal pushed through. Maybe they do, but I think if they don't, I think eventually valuation comes to roost. So that's my thoughts.
The Nautilus and those things, I mean, they don't have individual
They have all kinds of awesome things.
Yeah, individual
equipment's
things.
Great.
Does Nautilus have anything though that because Peloton you pay for the bike, but then you also pay the monthly subscription? Does Nautilus?
Why can't you get that? Why can't they take it to that?
Well, I don't know. I didn't say.
Why is that? Why is that not coming from Apple? Why? Maybe they could do. Maybe Apple's going to buy Peloton to do this. Why can't Apple just do that on their own?
Apple can do it on their own, but
that's the way Apple goes. I very much doubt Apple will pay. When's the last time? Here's a question. When's the last time Apple bought any public company for $12 or $15 billion? As we give Apple this rumor, today. Just curious, when is the last time? Because I can't remember the last time Apple bought somebody for more than $15 billion. A public company, not a private company, a public stock, a public company.
Yeah, they don't buy a lot of public companies, but they do buy a lot of companies, period. They
buy smaller companies. They do smaller deals, and they do them well. They do them very well. This deal would not be well for them. It's just my opinion. And there's a lot of people that have an opinion on Peloton. I mean, I tweeted out, on the weekend about, me being, I said if I own the stock, I would sell this pop. And I got some, some props from some people, and I got some hate from some people on that one. But, there was definitely a lot of people with a lot of opinions there. So a lot of people want to be bailed out. I mean, the stock's been straight down for the better part of a year. So there's a lot of bag holders, and everybody's pretty excited about this. I'm just saying, I think today's rally is a gift. 33% one day, not bad.
I'm more concerned about people's health, them improving them health, and doing things that they can. Not maybe not the most affordable way to do it, but I think they've started a trend that pre-pandemic that hopefully will catch on more. And for you are like, this position, and I'm a bag holder or whatever.
We're all bag holders.
You ever drop a dollar bill out of your pocket?
That would
and you never notice?
That would require carrying cash.
Yeah. Right. You got to carry cash.
But we're all bag. I know, Joe. Maybe you're upset because some people, say we joke with you. We all are bag holders in stocks. Every year at the end of the year, I write off something. My long-term portfolio is always something to write off. Take the losses on and then move on. I mean, we can't. It's nice to say I'm going to cut the loser all the time, but we don't all do it. Like when I stick them in the long-term portfolio, it's like, I kind of got this. I'm going to go long. And sometimes you're right, sometimes you're wrong. I've written off stocks 80, 90% loses is not a problem at all. So, to be a bag holder is not the problem here. You're going to be, unless you're the perfect trader, you're going to eventually bag hold something.
Right. This is a talk about, we can talk about the stock. We can talk about valuations and Amazon and Apple. But what I wanted this discussion to be about is your personal health. And I feel that this company has helped people improve their personal health. And that instead of worrying about your portfolio and all these things, or, being in the metaverse, this is one way to do it. And everybody should emphasize that. Everybody. And that would make me a much happier person.
Cheaper ways
because
to
your
do
health
it.
is your most important thing. You can have all the money in the world, but if you don't work out on your Peloton, you could just croak and just die.
But we can work out on our treadmills. We can work out with our Nautilus equipment.
Yeah.
We can go work
Vinny
out
made
outside.
a good point. It's about data too. I mean, getting maybe Amazon and Apple are interested for all that data. So we've already spent too much time about talking about this stock. We can see where it's trading. We can see what happens. But I'm going to end it on thank you to whoever made that report. And thank you to Apple and Amazon and Nike for showing interest in the
if there's any truth to it.
Yeah, there's any truth to it. Well, yeah. I mean, I can't think of many examples in the past where the journal reports a thing that's completely
Okay,
yes, but
sorry. Okay,
but
I'm just saying. I believe the journal. Journal's a great source. Didn't come from like some blog. I believe the
no,
source. I believe there's snooping around. I think when they get done their due diligence, they're all going to say
not
anything.
every
That's my
M&A
opinion.
rumor is created equal. Shout out deal reporter who's never been right in the world, but WSJ is pretty
They're solid. When I see
Yeah.
something from WSJ, we've given WSJ credit on this show a lot.
yeah.
So I'll take back the comments. There is probably something. Those reporters are fantastic. I follow them all. That broke the story. There's definitely something to it when Wall Street Journal, Dow Jones reporting something. There's almost always something to it.
Yeah.
That doesn't mean the deal comes to fruition, though.
That's true. It's definitely true.
And I don't think it does.
But the bottom line is you have now.
And yes, I do hate Peloton.
We're moving this along. Don't worry, we're down here. But now
you can work your arms too, Dennis. When you get on there, you can work your arms. You can work your legs. You get that better slap shot because you can be stronger. You can lift weights on it.
Dennis,
maybe I should get a Peloton. I can go buy one from online on Facebook Marketplace for like $500 right now.
Oh, do it. Do it. Will you please? Dennis, I'll send you the money. Will you do it? I will buy you a Peloton.
I should go do that. When I get my house done, I'm going to go on Facebook Marketplace and buy a Peloton. I'm probably not going to subscribe to their service. I'll probably just use the bike.
Dennis,
can you use a bike without subscribing?
Yes.
That's what I'll do.
Yep.
I have a good intel that they're working on a bike that'll also let you trade while you're on the bike.
That's good.
Yeah, it's called the trade bike. I just made that up.
I'll tell you,
that's a $1 billion idea.
It's a $1 billion idea right there.
Not to make any references here and people go off the wall, but man, they do have some pretty good looking female instructors.
Okay.
I mean, come on.
All right, we're not gonna take it there.
We are moving.
Everyone work out today. Jeff, Bill, Pulverizer, Raul, EKS, instead of EKG.
I'm going to go for a run outside.
I want everyone to go. I want everyone to work out every day. I work out almost every single day. You should do it. It's good for you. It helps you with your trading. It helps you clears your mind. It's good for you. That's why I bought the stock in December, was for our personal health. That's why I'm holding the stock, and I'm glad to see. I'd be glad to add more shares to my Apple position or Amazon. I don't add Nike. Let's go get them. If not, I'll hold it until Dennis's price target of $5. One way.
I don't have a price target. Teens.
In fact, I'm going to leave it and go on my Peloton right now.
All right, we're moving on. We've been on this topic for 10 minutes. We did merge Monday.
I'm going to show you my favorite instructor.
Coming on
Dennis is a really good instructor. Do you know there's an instructor named Dennis?
Joel wants to be.
He's very good.
We're trying to move us along.
A 20-minute workout.
People are getting upset.
Oh my gosh.
No one's getting upset.
We're moving along.
It is what it is.
Peloton reports earnings on Tuesday, I believe, as well.
Yeah, that's probably the most interesting thing here is they report. That's a great point. They report after hours tomorrow. That creates a timeline here, right?
If they don't say anything about this,
if they don't say anything,
maybe they're going to announce it during the call. That's what everybody hopes.
That's what people are probably hoping for. They're going to
$100 price takeout. No,
we'll find out one way or the other tomorrow. I mean, I guess tomorrow. Anyway, speaking of that,
yes.
Let me just bring up the calendar for the week because we are still in
the
heart of the earnings season. We mentioned why is this not? There we go. So today, nothing much, right? Tyson Foods is this morning. Take-Two Interactive is tonight. But really Tuesday, Wednesday, Thursday, right? We're looking at Pfizer. We're looking at Peloton, as we mentioned. We're looking at Disney, Uber, TWLO, Coke, Twitter, Firm, Zillow, big names reporting throughout the week. So it is, and then next week really is the retail earnings season. You got Under Armour on Friday, but then you got most of the big box retailers starting next week. So MGM is Wednesday, Friday about that. So yeah, you got a lot of big names here reporting this week. We are still in the earnings season.
We got some big caps. We got some mid caps. We got a lot of companies reporting this week. I think it's the better part of 1,000 companies reporting this week. So you're still in the heart of earnings season. It's going to be a driver for a lot of these individual names. The interest, I would say Disney, I would put right near the top on Wednesday. Everybody wants to know what's happening with Disney Plus. Everybody wants to know how the parks, everything, Disney's going to be a big one on Wednesday. Well, I own Disney, Joel, long-term portfolio, got in too early, bag holding this one. It's okay. Sometimes you bag hold. Thoughts here on Disney going into the report?
Was there a gap like around 120 that I just remember forever? I mean, it's already gave back all of the Disney Plus premium, right? And this had to be the Disney Plus pump, right? So as far as it, from a price standpoint, I don't mind nibbling down here. I wouldn't. I like it. At 180, 190 got real toppy. What I'd like to see is maybe set up a monthly formation like you did at the 185 area. It's going to take a while, but build a solid base here above 130. I'm looking for the reopening trade too. I think that's coming.
I think it is too.
Yeah. So shorter term, I mean, it really got hit with the market last what's that, 2 weeks ago, right? On Monday. They really took it out to the woodshed. But I remember when you guys were buying it at 150, 160, I was thinking, man, if this could come down to 120, 130, which was actually too low because it barely touched 130. So like I like it a lot better here than I did at 150, 160.
I gotta say the one thing that concerns me here is just we talked speaking of coming off that whole conversation of valuation before, and what I didn't get the chance to mention was sometimes for whatever reason the market decides to value some things more than others, right? Peloton is valued more than all of this. It's just the way things are, right? And just like Peloton gets that premium, so too did anything involved with streaming, right? They got a huge premium. Disney, Netflix, Roku, Fubo for a time, and I think what we're starting to see now is that premium is starting to come back down to earth, and it's not just Disney. It's everyone, kind of, right? I think people are understanding now that these content creators. I mean, in a lot of ways, the business the streaming business model in a lot of ways is frankly not as good as the old model of movies in theaters and then to VHS or DVD, right? Like that was a good model. That was a more profitable model for a lot of people involved. This model is insanely more expensive for the streamers, and so that concerns me. Like any kind of a secular re-rating of the streaming industry, which coming off of Netflix's quarter, that has me a little bit concerned. Like not enough to do anything about it, but enough to pay close attention.
Yeah, I'm concerned too about the quarter. I think if you get a flush on the quarter, I think it'll be like that could be your capitulation event that you'd look for to actually get in. I'd love the stock, and again, talking against my books, I'm long it, but I'd love it to get down to 120 because that was a huge level, and I would actually add to my position there. So I'm looking. I was way early. I bought this back before the market started to get ugly back in from the last quarter. When I thought it was starting to get cheaper as it leaked down. I thought it got cheap enough. But again, they're struggling with Disney Plus. We know the content. That premium's been getting sucked out of it. I thought the reopening trade was going to help it. The reopening trade has been delayed. I still think the reopening trade is eventually going to help the stock. So I like it down the 120 to 130 area. If it gets a flush off bad numbers, I'm a little nervous going into the report. I'll say that for the reasons you just cited.
Yeah. I found a gap that I was thinking about for well over a year now, and that gap must have been November 9th, November 8th, or it actually was a Friday. They must have announced it on a Friday, and it jumped $15. But you had a gap in here, and let me give you the gap, and it got really close to that 128.04. Was the top of that gap. You came all the way down to 130. So I think if you do, I don't know if you're going to get another shot down there. But I can only use one negative thing to say about Disney World, and everyone knows what I'm going to say, is there huge competition coming from, guess what I'm going to say?
The metaverse.
Yeah, the metaverse.
For Disney?
Why do you need to go to Disney World when you can put on your Oculus goggles and go up and down the roller coasters?
I am going to say the exact opposite. I believe that Disney will be one of the main players in the metaverse. It is going to fit right in with all their theme parks. And to your point, what a fantastic point you just made here, Joel. is why do you even need to go to the parks? You could actually have an experience right from Disney Plus. Throw on your Oculus. We'll take you to Disney World. It's $29.95 right now. We're going to take you into the parks right now with your Oculus and experience all that.
I got
Look
my
at that.
finger on the buy button.
Look at that. Look at that potential. The potential, it doesn't fit. Metaverse doesn't fit in any better than with Disney. Disney is going to be a major player in the metaverse.
I'm
and
bullish.
It's not a crazy valuation down here either. It's not cheap, but if you jack the parks, let's go back to 2018 earnings, to where they were before COVID started and start looking at it here. It's not insane. I mean, if you look, yes, they've cut the dividend. Yes, they've got, the parks were half closed or totally closed for a while. But as that stuff reopens, there's still going to be people that want to go do the physical experience, but there will be an offering, maybe even through like their product, like a Disney Plus, to like have your own Disney experience right from your living room.
Even if Disney does not quote unquote own the metaverse, let's just pretend that
who owns the metaverse?
That's a good question. Who does own the metaverse?
Okay, well let's just pretend.
Who sells the $200 million land?
I want to be the broker on that.
Let's just pretend that like the Meta platforms, let's just pretend that they make the metaverse and it's their thing. The IP is a gift that keeps on giving. Doesn't matter where, doesn't matter how. People want their Star Wars. They want their Mickey. They want their Marvel.
I love Star Wars.
It's the gift that keeps on giving forever and ever and ever and ever. Disney can just license that out in perpetuity. Doesn't matter where.
I'm totally on with that. As much as I disagree.
We're hoping. Me and Joel are hoping for a Disney Plus disaster. Stock comes down to that 130 area again or 120, and me and Joel are backing up the truck, and it's going to be the biggest position in our long. If this goes down to 120. Disney will become the biggest position in my long-term portfolio. I'm going to say that right now. Maybe not beat the Qs, but of individual stocks. And right now, Disney is not. Disney is a smaller piece. It got smaller because I'm down in it. I'm down over $12 in the thing or $13 in the thing from when I bought it. But I mean, I do think if it gets down at 120, I think there's going to be some value for Disney here. The brands are just not going away. Star Wars, like you said, Spencer, perpetuity. But I just think about the potential for the metaverse and Disney, and that looks like a big fit to me.
Brian LeBlanc he already has the chat comment of the week. Watch Disney in the metaverse while you ride your Peloton.
There you go. Look at that. Yeah. We'll do it all. Maybe Disney's going to buy Peloton.
It's 8:37
Is Tim going to want to come on today after our behavior?
No, I know. We've had some bad behavior here today.
No,
We're feisty today.
Everything is fine. Market structure.
I only get 87,000 tweets about my Peloton. And who started the whole thread? Let me guess. At Triple D Trader.
Did I start the whole thing? Did I start the fight again? I put controversial tweets out there, and then they get picked up, and then people start getting angry at me for my opinion. I thought I was entitled to my opinion. Apparently not in Twitter. There's people that were mad at me for saying, they're like, you're crazy. This is going back to $100. I'm like, okay, sure. But anyways, let's bring Tim on.
My phone was on the counter and I had it on vibrate, and it's like jumping around.
Let's change those notifications.
I know. I always am on silent, but then when Lisa or the girls call me, I miss it. So I did. I went right. I'm like, I got.
What are you gonna do, man?
Okay.
Quast CEO, Market Structure Edge. Tim, good morning. How are we doing?
Well, how are you?
Doing fantastic.
I never know whether the mic's going to work. And are you getting that weird feedback, or is it just me?
Just you.
It's gone.
Okay.
Now. Okay. It was there for a second.
Okay.
Yeah, and
cool.
Dennis, you're entitled to other people's stuff, but not your own opinion.
Is that how it works? Okay, I got this. Thank you for.
Yeah, just clarifying. Tim. Yeah, you're welcome.
Opinions on Twitter, man. Everybody's got one, and nobody likes anybody else's opinion unless it's the same as theirs.
Yeah.
Tim,
good to see you. Yeah.
What's on your radar here? We've been talking about Disney and Peloton and airlines all day.
Like everybody else.
Yeah.
Well, the first thing was great literature over the weekend. All the lyrics to Sting's songs from Dream of the Blue Turtles. That's some great literature. So listening to that on Spotify, there's the lead into the market. And then reviewing that stuff there, you don't find that in hip hop. No offense to the hip hop fans, but that's some good stuff.
Okay.
So so you've been talking deals, have you?
Well, yeah, but I'm just curious as to like if we can like look back to last week, what was the supply and demand of the overall market last week?
Bottomed and picking up. So there were
Yeah.
the demand side was improving. The supply side, which is you guys know this, but for those who don't, we think of the supply side of the stock market as short volume, and it's we'll skip the backstory, but those are the two core things that we measure. So we're looking at the way that behaviors change the demand for stocks in the short term. These are short-term measures, and the presence of short volume, the amount of trading volume coming from borrowed or created stock. By the way, there was discussion about this on CNBC earlier this morning with Jay Clayton, used to be the head of the SEC.
I saw it.
Did you? Okay.
Yeah.
And they danced around it. I actually thought Andrew Ross Sorkin did a pretty good job there. They danced around this idea of, well, what if it's not real? And I wish they would just come right out and explain that. But last week, Spencer, to finish the answer here, those levels in the S&P 500. So we're taking the components of the S&P 500 and creating an average. And it was 49% of all trading volume last week was short or borrowed, which is the highest number we've ever recorded.
Wow.
It's ticked down to about 48.3% as we kick off this week. Demand at 3.6 and rising back toward 5. We expected that the market would, as a result, would be up with volatility. Those conditions tell us that the excess supply would undermine rising demand. And so that is exactly what played out. Supply and demand are very good features of the market to understand what's occurring. And it's also a great way to find out whether people believe a deal will happen. If you want to look at Peloton and determine whether something's going to happen there, that's what you want to look at, traders. Okay, so let's have a look at this. And this is true in anything, by the way, traders. If you want to know what the supply, you want to know whether people are short something, and it's very difficult to squeeze a stock today because of the way that the market works. Market makers can create stock. They have to. They're required under the regulations to create a continuous auction market. We've talked about this over and over. They're exempt from the short locate rules. And you have to understand that most of the supply and demand in the market doesn't come from external forces. It comes from internal forces. It is the mechanics of the market that create that. But when short volume vanishes and there are discussions of deals or activism, that's when you know that there is real substance to it. So if we go over here and look at, I've actually got this in the Benzinga February 7 portfolio here. And notice this. This is what you really want to see. You want to see rising demand and falling supply. Those conditions produce gains. Very consistently true. It's true whether you're, whether you're buying or selling cattle or buying or selling stocks. Supply demand divergences is what create higher prices. And we look at Peloton here right at the top of the list. Notice this right off the bat. It is 61% short at present, meaning 6 out of 10 trades involve borrowed stock, we could just say.
Okay.
So sentiment's rising, but short volume is very high. The key behavior is active money. So there are people who are buying stocks thoughtfully who think, yes, something's going to happen. What's interesting is that has not reached a level of belief among the market makers. Look at this very, very high level of supply. This is why this was the best condition right in here. But this demand side's been terrible, right? See all these little peaks here? These are like mountains in the eastern United States. They're just little mounds. And that's what you don't have any demand for Peloton yet, and supply is very high. For belief in a deal to become real, these levels should drop to 30%. It doesn't happen every time. It just happens over 80% of the time. We've been tracking that data a long time. We work on a lot of deal situations over on the corporate side of the business, and this is a very consistent characteristic. So at present, this would tell me that the effort, people may want to buy Peloton. The trouble is Peloton going to want to sell itself for what somebody would be willing to pay for that business? Well, as a business owner, I know what you put into something. And that's good. That tells us we have a long way to go before they reach some kind of
Tim, can I
agreement on
interrupt you for
price.
1 second?
Please,
Can I
please do,
interrupt you
Joe.
for 1 second?
Yeah,
So this is based on Friday's data, right?
correct. Yep.
Okay.
Will that
Yep.
change? I think Joel wants to know. Is that what
Yeah.
you're going to ask, Joel?
How quickly
Yeah.
I got
can it
excited.
change, right?
I was wanting to ask the same question. Sorry.
Yeah. Look, it can change dramatically. There's no question. We see
In
that
one
on
day?
occasion.
In
It could
one day?
change in a day. It could change in a day. If we look at UPS, the reason UPS shot up, by the way, is because of that. So it went from effectively 56% short about 5 days before they reported results, 4 days, to 39%. That's a very big drop in a stock that is that liquid. So there is a short squeeze. That is an actual short squeeze. We very rarely see them because of the market maker exemption from short locate rules. If you look at Snap as a counterpoint to this, stock that went down 25% during the market, 23.5, and then it jumped 60% after hours. And look at the supply side. So this is created stock. Snap is soaring because there's no supply, but people are buying it with marketable trades. That is, I want 100 shares or less at the best price. And you can hit that with machines. And if the supply side, short volume, rises, it's at 60% right now, at the same time that price does, that tells us there aren't actual sellers of Snap. Who would sell Snap at that level if you owned it where it was 3 months ago, right? So that's how that happens. And it's very important to understand these mechanics, traders. You can't just think, oh, there's a finite supply of stock that is owned by people who then sell it to other people. Sure, that's part of the equation. But a very, very large part of how the market works is the role of market makers from Goldman Sachs to Hudson River Trading, who are going to take the other side of trades at the best price because they have to. That is the market we have. It's what the SEC decided was the top priority. It is more important that there be 100 shares of Snap to sell than that those shares in the trade actually exist. That's a very important thing to understand.
I mean, that's what liquidity is built on in these markets too. I mean, we're not in Kansas anymore where we go back 25 years ago and institutional liquidity was probably the main source of liquidity. I can remember, and Joel would very much know this, as you go back to the 90s, big orders on the books all over the place, liquidity everywhere. And that doesn't exist anymore. The liquidity is still out there. Those institutions still out there, but they're on the close. They're using VWAP. It's not satisfying instantaneous demand. Like the liquidity that an institution's providing, even if they're just slowly sifting out there, will absorb slowly over time. But if you have a big seller just comes into the market, it can knock out multiple levels instantaneously if it wasn't for the market makers that are out there. So the dynamics have just completely changed. And that's why you need these market maker exemptions so that we have that continuous market.
Well, there's your trade-off. That's the truth. And to add a couple of points to your very good point about liquidity, you go back before Reg MS, and particularly before decimalization. So decimalization occurred in 2001. Reg MS was implemented in 2007. It was finalized in 2005, but it didn't affect the market until 2007. Before that, the average trade size in the market was over 1,100 shares. NASDAQ market makers who were registered were required to offer 1,000 shares at the bid and the offer. Today, the average size in the S&P 500, the average trade size is 103 shares. So the size of the trade has come down by more than 90%. It's a tenth of the size that it used to be. And that's why prices change constantly. There's a big difference between volume and liquidity. Liquidity is how much of something actually exists. Volume is how much it trades. The same stuff can trade over and over and over and over and over. And then you think, and this happens to public companies all the time, that you have a huge buyer or seller when it's just the same stuff churning over and over. Well, that distortion is very important to understand, traders. We talk about these things because to beat the market, you have to understand how it works. And the beginning point is to understand supply and demand, because those are the foundational building blocks for prices are supply and demand. And that's why we measure this stuff.
That's it. And that's why I personally enjoy Tim's segments and enjoy all the insights he brings. And if you want more, it's very simple. Click on the link that's on the screen, in the description, and in the chat, marketstructureedge.com. Tim, always a pleasure. We have to get you on Benzinga Live at some point this week if we can figure that out. But have a great rest of your week. And
You guys too.
all right, thanks for coming
Good
on.
to see you.
Thanks, Tim.
All right, it is 8:49 here. We got about 10 and a half minutes left in today's show. So if you have a ticker for us, drop your tickers in the chat, and we would be glad to discuss them and give us our.
I should have snuck it in. I just
As
wanted
long
to
as
ask.
it's not Peloton.
No, we're not doing that.
I just want to ask Tim, like, would he make a decision based on
Oh, sorry.
1 day change?
I'm sorry, Joel.
It'd be curious to see that data, Joel. Is a great point you're going to make, like what
Yeah.
it looks like on Monday, what it looks like after today, after the next day. Has it changed, because of the significant move that we're seeing, obviously, in Peloton here today?
Okay, question front number one that I see. How low is Ford going to go? Yeah. That's all.
I missed the out on this. There's no doubt I missed my out. I did sell half of it because I was nervous on the report. I didn't like this ugly, $20 consolidation. I just don't like the market we're in to a certain extent. I don't know what to say. I've missed the out. I think there's still an EV play. I think long term, I think Ford actually will figure it out and turn around, just like General Motors. But the technicals on this are absolutely broken now. So it doesn't look good from a technical standpoint at all. There looks like gaps to go. I mean, let's throw it to Joel. He's our technical analyst here, but I don't like the technicals on this, even though I'm long it.
Oh man, this one is I had I didn't want to mention it.
In 3 weeks,
I know.
it's completely went from bliss to piss.
I know.
In 3 weeks, it went really fast. It was when they pulled the rug out from value, and we were saying that could eventually happen, that the value did feel like, like it kept, Berkshire Hathaway was going up and ARK was going straight down. And now ARK's, now they're starting to come for the value names too. So there's still value here. It's still cheap. It's always been cheap, I mean, on a relative basis here, but the technicals don't look good anymore. And this earnings report's ugly. So it's hard to just be a buyer here in the middle of nowhere. I mean, I'm long it. I sold half of it. I plan on holding the other half because I believe in the longer term story here. I do believe the F-150 Lightning is going to be one of the best selling, if not the best selling EV vehicle ever. But again, we're ways away from that. Right now, the technicals are ugly. Would I buy more? Would I buy back my shares at 14 if it got just silly? Yeah, I would.
Yeah, 14.
Yeah, I would.
Yeah.
But that's the problem. We ran up so fast from 14 to 20 in like a month that it's like, okay, well, now it's like, are we going to run down that quick? It's not much in here. It's kind of scary.
What you got to do right now is when it's going to go back up, I don't know. Before it goes back up, it has to find a base, and it has to build a bottom where institutions are either, willing to reload or big shorts come in. I don't know if 1752 is going to be that level. 1752 was your low on Friday. I think you have to be prepared to ride this down to 17 right now. That was your low in November. If in fact it gets that 17 area, does your 1685 lows, your 1702 lows, and then 16, a bunch of lows, it shows that institutions are reloading here at that area. Then you build a base and then you go back up. Right now, if 17 doesn't hold, Dennis skips the 17. He goes right to the 14. And that's the November low, and I'm just not quite that bearish. I think we can build a base at 17 and turn around. Just seems like they've just been coming out with bad news after bad news after bad news, right?
There's
Delaying
supply
this.
chain issues.
Well,
I don't know
I
if
mean,
I'd say that.
It's not. It's a good problem, right? The problem is they can't keep up with demand. It's a good problem to have, right?
Yeah, that's a lot better than the Peloton problem.
Yeah,
They're spending a lot of money for the future. Spencer, do you read Cranes? Did you see Cranes about the article about the train station?
No,
I mean,
how's that going?
They're spending a lot of money. They're spending, and it's also for GM too. Basically, Ford is pivoting on this EV, not only for the vehicles, but they're looking. I mean, they're looking 5, 10, 15, 20 years out. They're talking about, how to change the grid, how to change roads. And it's this tech center out at the old abandoned trade station. It's a beautiful building, and they're trying to, while Tesla focuses on cars and these other companies, focus on actual cars and the production, what Ford is trying to do is they're putting on their long-term glasses, and like really to have, connected cars and really good driverless cars that don't crash. That's what they're working on. So it's a ways away. They're spending a lot of money to do it. And right now, I think maybe they're being tagged for that a little bit.
Someone dropped ticker ABC in the chat, AmerisourceBergen. I want to pull up this chart here. Oh, I'm not sharing my chart.
They make bowling balls, don't they?
No. And
Yeah, they do.
If you look at, I don't get that reference. If you look at ABC versus McKesson versus Cardinal Health, the three largest
That's
pharmaceutical wholesalers in the country, these three companies control 90% of the pharmaceutical wholesale market in the U.S. Look at these three right now. McKesson is in blue, AmerisourceBergen is the candles, and CAH is in purple. Okay, look at Cardinal Health.
What's dog for some
What's
reason.
going on there?
It's been a dog for a long time. I had this in my long-term portfolio, Cardinal Health, for a long time, and it just always is at I feel like it's always at 50. Like it doesn't get away. And I know we were up at 90 back in 2016, but the last 3 or 4 years, we're just always around 50, and we can't get away from it. And I was like, I think I bought this. I had it for a couple of years. I was like, it just doesn't go anywhere. And I sold it just because it just wasn't moving up or down. Yeah. So it's just always hanging around 50. I don't know why that is, but that's a stock that just seems to go nowhere. I don't know why. Obviously I don't follow, maybe fundamentally close enough to know the differences between AmerisourceBergen, McKesson, and Cardinal Health. But I'll tell you, it's been a perennial underperformer, and that often the catch-up trade, if you're always jumping in stocks for the catch-up trade, you're usually buying the poorest stock in the group.
Just a new all-time high just recently on Thursday in AmerisourceBergen, so it's had a nice run. I can't tell you whether it's just a solid breakout here and you're going 140, 150 because these stocks are, they're a little bit more stodgy. But what you want to keep an eye on here for a very important number for whoever's following this, 137.88. Now, that's not the all-time high that was made on Thursday at 39.32, but what that represents is the all-time closing high. On Friday, they opened lower, much lower, well, not much lower, $1.50 lower, and they made a run at that area, and they came up at 37.79. So let it chop around. See what happens at 137.88, but I'd really like to see that improve as the all-time closing high to, for me to substantiate another leg higher.
All right, we got a few people asking us about Chegg, CHGG. They report earnings tonight.
Where's that at?
It's in the 20s.
Today, killed, Joel.
Yeah, it's gotten absolutely killed.
All this low bar, you got the whole, thing happening. There's a very low bar. I don't want to be short any of these stocks going into these reports, even though they could gap down more. I mean, right now we have a real battle between growth and value, and value has been winning for the majority, but growth in the last couple of days is starting to show some life. ARKK did not make new lows on the move. It reversed significantly on Friday. I use that as my indicator for growth stocks. This obviously, I don't know if it's considered a growth stock anymore, but it's a high valuation, name, and and it's been really beat up. So it has a low bar. That doesn't mean I want to be long it in the report too. I just I'd be scared to be short it.
What if Peloton doesn't get taken over, but they do a merger with Chegg, and they provide education to kids while they're exercising, because kids can exercise and be educated at the same time. We're helping the youth of America.
Y'all just solved all the world's problems right there.
This is hanging out. I don't know. Just hanging out near the low of the move, consolidating. Needs a catalyst. If you're long, lean on the low of the move. If you want to buy this thing on strength, then what you want to, 31.5. I mean, until it clears 30. Wow, that was a bad month. And it had come down to 63.12 was your high in November. And then the high in December was half of that at 31.41. So pair of monthly highs at 31.40. I don't see it getting away from me until it clears that level.
A couple more here. Sorry, there was one that I saw that was caught my eye, and now Baba, right? Baba registered like 1 million shares over in Hong Kong.
Gosh, you just can't get them.
So
it's now $5 more. The low of the move is that 110. The triple bottom is down there at 110. It bounced off of it again, so I'm not going to argue with the 110 level. It's bounced off of there multiple times. I've tried to I've played it a couple of times, but I haven't really, stuck this in the long-term portfolio for a while since I sold it after the disappointing earnings report. I know it's cheap. It's just been, obviously such an underperformer. It's so hated now. That's why I started, when I was buying the other stocks, I bought Baidu and JD. And I didn't buy Baba. I want to own Baba, but man, it just cannot get away. It cannot get any strength going. 110's big though. So does it bounce there again? Maybe. Does it bounce there 1, 2, 3 times? Maybe it bounces there the fourth time.
Yeah, now you got to use 120 as resistance. You had a couple lows in that area. If you're looking for this gap fill here, you could get it today. I believe it's at 115, so haven't quite hit it yet in the pre-market. So fills the gap, and then all kinds of support at 110. Hey, Mitch, are you in the background?
He is, but he's having some camera problems right now.
Oh
so,
no.
Yeah, so
Okay.
I don't know if he'll be able to. But Mitch
We'll
had
get him
some
on
thoughts.
tomorrow.
Yeah,
We'll get him on tomorrow.
Mitch had some thoughts on Peloton that he's going to share on
Okay.
live trading. So that's a wrap for our show right now, everyone. Joel, will catch you on at the close, obviously.
Yep, I'll catch you in a little bit. All right, everyone, have a good day.
Dennis, have a great rest of your day. I have a housekeeping item I want to address. Benzinga has grown a lot in the last couple of years, last year and a half specifically. And with that growth, sometimes comes people trying to impersonate Benzinga, act as Benzinga, create a fake product, or DM you as Benzinga. If you see a fake Benzinga in the wild, please email us, okay? The email is on the screen. Scam reports at benzinga.com. If you see anybody, passing themselves off as Benzinga, you see, a different Benzinga logo out there, or you see someone copying us, please email us, scam reports at benzinga.com. If we're like DMing you, like asking you, like, to pay us in Bitcoin, like that's not Benzinga. We're not going to be doing that. All right. So please email us. If you see something, say something. Scam reports at benzinga.com. Thanks to our guest, Tim Quast. Thanks to all of you in our chat. Get 25% off Benzinga Pro. The link is pinned to the top of the chat. Check it out. pro.benzinga.com. And we're going to hop off and go to live trading with Mitch, Zunaid, and Ryan. Everyone, have a great rest of your day and stay green out there.